forget to like and subscribe.
And hit the notification bell
so we can go to college and get more knowledge.
Welcome back in the place to be with the CBDC Assets Group. Thank you all for being a part of the group. It's me, Corey, and today I got a video of Christine Lagarde at the BIS Innovation Summit for 22. This just happened a couple days ago, and I love Christine Lagarde because I know how passionate she is about crypto, and I've been a big supporter of hers. But again, I still don't go into anything blindly, trusting and not understanding and doing my research. So just a little bit of background on Christine Lagarde. All right, Christine Lagarde is the president of the European Central Bank. She took the job in November of 2019. But before that, she was a managing director of the International Monetary Fund. Now, this is the interesting part. I know that there's politicians who have served almost a decade in prison because they stole upwards of $20 million. And it seems to state right here, she had a criminal conviction of negligence in allowing the misuse of public funds. Check this out. Remember that I said there's politicians that did decades in prison for tens of millions of dollars? In 2011, Lagarde's role in a $403 million arbitration deal in favor of a businessman that she knew. And like I said, in December 2016, they found her guilty of negligence, but declined to impose a penalty. So what happens when she gets found negligent of all these people's money, of the $403 million, you ask? Euros? She becomes the president of the European Central Bank. I don't know, man. I just like knowing who these people are and watching what they do. And this shit right here sounds funny to me. I just got to call it how I see it. I support her. She supports crypto. But these are the highlights of what she has to say, and I think it's interesting. Let me know what you guys think in the comments below. She's talking about transformations taking place at an accelerated pace. 40% of increase in the past 5 years of now no cash payments. 40% increase of no cash payments in Europe. 50% of people surveyed in Europe say that they prefer cashless payments. In this video, I didn't cut all of it on, it's just for time, but she talks about CBDCs and how they're the new narrative of now they're safe because they're trusted institutions, and how they're the wave of the future. And I think I had some foresight in doing research and understanding what a CBDC was, and also understanding that if you screw the banks, they bring out the tanks. So it's better to get right or get left. Stack your pennies next to their millions. That's it for me. Remember, there was none before me and there'll be none after me. CBDC Asset Group. Corey out.
Back to the Innovation Summit today, the president of the European Central Bank, Madam Christine Lagarde. President Lagarde, welcome back.
Thank you so much. Very happy to join you.
Wonderful to see you. I want to start today with a high-level question. How do you see the transformation of money that is happening all around us? Has the speed of development surprised you, perhaps disappointed you? I think back to ideas you were offering 5 years ago about new technologies being transformative. Are we seeing that? Are we seeing enough of it yet?
We are certainly seeing transformations taking place at an accelerated pace. I think that one of the consequences of the pandemic is that people have got much more used to digital means. And I'm not only talking about payment here. Work became more digital, shopping became more digital, a lot of transactions of all sorts have turned digital by virtue of the fact that we were all stuck and locked down in various places. So if you look only at payments, the total number of non-cash payments has increased by nearly 40% in less than 5 years' time. That's just to give you an idea. And if you ask, which we have done, European area consumers what they would prefer in terms of payment, they generally prefer cashless means of payment. And this is about 50% of them. Only 4 years ago, it was a little over 40%. So if you start from what is the demand, what do people expect, what do they want, it is predominantly now cashless payment, it is digital payment preferably, and it is transactions on internet. So if you combine these three, there's a real push for those of us involved in payments, in currencies, in coins, to actually go in that direction.
So I want to speak a little bit about central bank digital currency, and we'll talk about the digital euro in a moment. Of course, the BIS and us at the Atlantic Council are doing in-depth research on this issue. I have our tracker project behind us. Do you think central banks are moving quickly enough, given the point you just made, and we think about the advancements that are happening side by side in the private sector? Chair Powell here in the US often says it's better to have it right than have it first. Is that a sentiment you agree with?
I think that sentiment is changing around the globe. But first of all, let's look at what we have. Thanks to your great tracker, we know that there are 9 countries that currently offer CBDC. If you look within the BIS at the number of central banks that are looking at CBDCs, which have begun to do some research, do some term sheets, weighs the pros and cons, it's nearly 90% of total GDP. More than 80 national central banks are actively looking into this. So I would argue that central banks have been a bit slow to begin with, but now there is real pressure coming from both the customer base that we were discussing earlier, second, the competition, which we have seen in action over the last few years, and third, public authorities. I think the fact that President Biden for the United States has signed this executive order asking players and authorities to focus on this is a good indication that, yes, there is urgency, and we need to do real solid work to respond to the needs that are out there.
So let's talk about CBDC and the digital euro project specifically now. And can you share with us the key drivers that led you and the ECB to pursue the project and where the status is right now of the digital euro?
Sure. So here in Europe, and particularly in the euro area and at the European Central Bank, we decided that we should move ahead studying CBDCs about 2 years ago, a little over 2 years ago. And it was prompted by 3 things. One, customers' demand, for the reasons that I've mentioned to you. More non-cash transactions designed to go digital on the part of customers, and not just young customers, but also more experienced ones. So that was reason number 1, customer demand. The second was competition threat. And it is known to all of us that when Facebook, now Meta, decided to push the boundaries with its then Libra, subsequently named DM, which has now vanished a little bit, that was regarded as a potential threat and triggered the desire to respond. And I think third, the advance by some national central banks around the world with their project, and PBOC comes to mind because China was ahead of the game in terms of experimenting, in terms of piloting, in terms of structuring the CBDC. So with these 3 elements, we decided that we couldn't just risk being behind the curve, and we needed to go ahead and to move full speed ahead.
I asked you at the beginning about sort of how we got to this point. I'll ask you at the end to look forward a little bit. 5 years' time, hopefully we're gathering together all in person for the BIS Innovation Summit. Where will the world be in terms of digital assets, in terms of central bank digital currency? If I could ask you to forecast a little into the future, where you think we're headed.
5 years' time, I would say many of us will have completed the project, will be in a position or will have launched their digital currencies. We will have done enough good work so that those currencies are convertible easily. We will have worked hard on our payment systems so that transfers and settlements can be orchestrated, organized in a safe, secure, and fast way, faster than now, both between central banks and commercial banks, but also between customers and commercial banks, and that the volume of fees and earnings by some will have declined to the benefit of better services and happier customers.